Hey guys, Dave Keller here with Market Misbehavior. As we get into the month of May, I'm observing this market really rallying strongly off of those mid-April lows. Today we're going to talk about 3 market breadth charts that would tell me this bull phase is absolutely continuing higher. Before we get to those 3 breadth charts and what they mean, here's one more thing I wanted to tell you about. I'm a technical analyst, which means I spend hours every day looking at hundreds, if not thousands of charts. But in my own decision-making process, it's not purely technical. I actually spend a decent amount of time looking at fundamental factors that are actually driving companies and empowering them to grow for multiple years going forward. I look at macroeconomic data like the Fed and inflation and interest rates to think about how all those factors might impact those stocks and ETFs that I'm looking at. And I also have learned from spending years working with institutional investors that having a good quantitative model is super important. What a quantitative model does is basically look at the characteristics of successful stocks, looks at all the factors, technical, fundamental, everything, and wraps it into one rating, and then allows you to focus on the best opportunities within a particular set of stocks or ETFs. The good news is, as an individual investor in 2024, you have access to a pretty decent quantitative model through Seeking Alpha. If you go to marketmisbehavior.com/seekingalpha, you'll be able to take advantage of their quantitative rating. They actually have a pretty sophisticated quant model that is driving their quant rating. You can then cross-reference what we're talking about on this video, is looking at the charts of leading stocks, looking for big base breakouts and good technical opportunities, but also look to see if the quantitative model from Seeking Alpha supports the upside potential of those names. So go to marketmisbehavior.com/seekingalpha to find more information. Usually get a better deal for you. It's an affiliate link, which means that helps me make Market Misbehavior awesome, and we're all happy. So check it out, and let's get back to the charts here. All right, so chart number 1 is looking at the percent of stocks above key moving averages. This is one of my favorite market breadth indicators because it really addresses the individual stocks that comprise the major indexes. So we can look at the patterns in the S&P 500, and this top panel is showing me the S&P 500 on a closing basis. We can see over the last week, the S&P has gone from below the 50-day moving average to back above the 50-day moving average. Now, for the record, we did see that in late August, early September of last year before the next big leg lower, which is why holding that 50-day moving average is so vital for the market here. That's why S&P 5140 or so is a pretty key level right about now. As long as we hold that in the next week, I think this, from a price perspective, market conditions remain strong. But the indicators at the bottom are really the key to what we're talking about here with this first market breadth chart. Market breadth is all about participation. It's all about those individual stocks that make up the indexes. So the 500 stocks in the S&P, what are they doing? Well, here we're looking at the percent of those S&P members that remain above their 200-day moving average. In the bottom, we're looking at the percent of stocks above their 50-day moving average. If you look in the top panel, we can see the S&P is now back above its 50-day moving average and well above its 200-day moving average, which is currently down around 4720. So 80% or so of the S&P 500 members are also above their 200-day moving average, and about 57% are above their 50-day. So just like the S&P has gone back above its 50-day, a lot of individual names actually have done that in the last couple weeks as well. Mid-April, you can see that this indicator here was around 30%, so less than 1 in 3 of the S&P members had been above their 50-day moving average, and that's down from around 90% at the end of last year. So think about it this way. About 2/3 of the S&P were above their 50-day at year-end. By mid-April, we're below their 50-day moving average, and now about 30% of them have regained the 50-day. That shows you how many stocks have participated in this short-term upswing from mid-April now to mid-May. That's pretty encouraging. I have a horizontal line here right at 50%, and I think generally speaking, above 50% is bullish, below 50% is bearish. That's the way I use this indicator. Number 1, main goal is, are we above or below 50%? That's my basic binary bullish or bearish reading. Do we get to extremes? Do we get up to around 85, 90% or down to 10, 15%? That often can indicate an exhaustion point in a strong moving market. For now, we were below 50%. We're now back above 50%. I think as long as that holds May into June, this is a pretty strong market with broad participation. Market breadth chart number 2 is all about leadership. That first one was about broad participation. Are most stocks participating in the uptrend? Here we're actually trying to identify the leadership, right? For the S&P to make new all-time highs, and we're not far from that, right? We're just below 5250, which is the all-time high that was set in late March. For us to get above that, and make it to a new all-time high, you need to have individual stocks that are pushing the way higher, right? So even though the S&P is still yet to make it a new high, the Nasdaq has not made a new high just yet. A lot of individual names actually are. Here we're looking at the daily difference of new highs minus new lows. So new 52-week highs minus new 52-week lows. The next panel down is looking at the broad New York Stock Exchange. How many stocks on every day are making a new 52-week high? That's in green. Making a new 52-week low, that's in red. The bottom panel, that same visualization, but for the S&P 500 members. How many of them on every day are making a new 52-week high? How many making a new 52-week low? Look at that bottom panel over the last month, and you can see that in mid-April, as the market, it turns out, was bottoming out, very few, if any, new highs, maybe one or two on a random day, and a couple stocks making new 52-week lows. But most things were kind of in that no man's land between a new 52-week high, most of which came in the first quarter of this year, and a 52-week low, which for a lot of U.S. equities happened in sort of the fall of last year, September, October. So most stocks kind of in the middle. But look at the green that you've seen get larger and larger over the last 3 weeks or so. As of Thursday's close, 47 stocks, or almost 10% of the S&P 500 members, made a new 52-week high. And actually, most days this week, that's been the case. So I would say why this is chart number 2 is for the market itself, as defined by the major benchmarks, for those to keep going higher, you would need more and more stocks showing new 52-week highs, which means you need more than 10% of the S&P breaking out. You need 15, 20, 30, more and more of those. And so you need to see more and more green continue to increase. I think it's encouraging from mid-April to mid-May that we've seen more and more stocks making new 52-week highs. We need a lot more. We need more leadership names driving above their first quarter highs and basically erasing the downdraft that we had in April. If I see more and more green over the next couple weeks, that would confirm a very bullish phase for stocks. That gets us to our third one, which is the bullish percent index on the Nasdaq 100. So now that we've confirmed that it's a broad rally in that first chart, the percent of stocks above their 50-day, we've confirmed that there's early leadership by the fact that there are some stocks making new 52-week highs. Now we're looking at the mega cap names. And by looking at the Nasdaq 100, we're really focusing on mega cap and large cap growth stocks like technology, communication services, consumer discretionary. That's what the Nasdaq 100 is really comprised of, and includes some of those big, magnificent 7 or FANG names like the Microsoft, Meta, Alphabet, Amazon sorts of stocks, but also others that are sort of, semiconductors and software names that are in that bucket of 100 leading growth stocks. Now, this indicator, the top half, is showing the bullish percent index on the Nasdaq 100. The way this is calculated is actually by looking at 100 individual point and figure charts. Point and figure charts are a classic visualization, basically charting trends, uptrends in a column of X's, downtrends in a column of O's. And this chart, point and figure charts, basically are a very simple way of measuring trend and tracking uptrends and downtrends. What this indicator does is it says out of the 100 Nasdaq 100 names, how many of them have most recently given a buy signal on their point and figure chart. And the way point and figure chart signals work is you really need to break out above a previous high to confirm a bullish signal. So this means, as of right now, just slightly less than 50% of the Nasdaq 100 names are showing currently a bullish point and figure signal, which means it's about 50-50. It's about a coin flip. I've highlighted with these blue vertical lines over the last year and a half, there have been twice where we've gone below 30%, which means almost all the Nasdaq 100 members are in a downtrend. Then we break back above 30% and follow through to get back above 50%. We saw that in January of 2023. We saw that in November of 2023. And maybe we see that as early as next week. And that's why this is the third market breadth signal I would look at. Back in December of 22, back in October of 23, we went below 30%. We actually had that in April, going into the April low as well. I'm showing the NASDAQ composite on the bottom here just for comparison. what I'm looking for then is it to come out of that 30% region and actually go above 50%. And I've highlighted the blue lines to show you that actually happens pretty early on in a recovery. After you've had a pullback, this is often a really good all clear signal that tells you there's enough stocks within this leading growth universe that if they are breaking out, if they're giving bullish point and figure signals and it gets over 50%, that usually means there's a sustainable move because these stocks are rallying and they represent a large market cap, a huge weight in our major benchmarks like the S&P and the Nasdaq. So this indicator getting above 50% in the next week, I would argue would be a third very bullish chart to see. Now, as you reflect on those three charts, I'd love for you to think about, what they would confirm, right? If they continue to demonstrate strength, if we have over 50% of the S&P above their 50-day moving average, if we have more and more new 52-week highs in the S&P, if we have over 50% of the Nasdaq 100 giving a bullish point and figure signal, that would all confirm this beautiful rally that we've had off of the April lows. But these charts also give you a good exit strategy if we go back to less than 50% of stocks above their 50-day, if we have less new 52-week highs, less green on chart number 2, and if we don't get above 50% of the Nasdaq 100 members in a bullish point and figure chart, then this rally may be exhausted. So these charts help you define a rally and confirm a rally, but also I would argue maybe a great indication that that rally is exhausted. What do you think? Do you think the S&P powers above its current levels, gets above 5250 and makes a new 52-week high, new all-time high in the month of May? Please drop a comment below and let me know. For Market Misbehavior, I'm Dave Keller. Have a great one. We'll talk to you again soon.